How's it going, everybody? This is BeatTheBush. Today I'm going to talk about CDs and why I hate them so much. CDs stand for Certificate of Deposit, and it's something the bank will sell you in durations of something like 6 months, 1 year, 2 year, or even 5 years. These CDs would often offer you an interest rate that's a little bit higher than what you would get in an online savings account. However, if somehow you need to withdraw the money before the certificate of deposit matures, they're going to not pay you interest for a certain period of time, or they would charge you a penalty fee. Just as an example, I'm going to name a few online savings account that gives very good interest rate. For example, Synchrony gives a 1.3% APY, American Express Savings gives a 1.25% APY, Goldman Sachs Online Bank gives a 1.2% APY, Ali Bank gives a 1.20% APY, Discover Bank gives a 1.15% APY. If you go to your local retail bank and shop around for a CD, they're likely going to give you an interest rate that's comparable to an online savings account. So to me, putting your money in an online savings account is generally better than buying at a CD rate that's exactly the same rate. Your money in an online savings account is much more liquid compared to a CD where you essentially get locked in for a year or more. Now, let's say you're smarter than this and you don't go to the big banks and buy CDs from a big banks where your rate will be a little bit lower. You go online and shop for one. Now, you're going to find CD rates between 1.5% for holding it for 1 year and 2.35% for a CD of 5 years. Now, I don't know about you, but 1 year is a really long time. Whenever I try to put money anywhere for 1 year, I don't really know if I will need that money in 1 year's time or not. Things change so much, and I've seen many people who buy CDs end up having to withdraw money from their CD, and they end up not getting several months worth of interest, or they have to pay a penalty fee. So to me, 1 year is like an eternity, and 5 years, I won't even think about that. You can get 2.35%, but it's only 1.05% more than what I get at an online savings account, which means every $10,000 I invest, I'm going to get $105. It is something, but it being so illiquid is a really main concern for me. Now, if you have a lot of cash and you somehow need to keep it in somewhat liquid form, such as in a CD, but not completely liquid, then you could think about staggering your investment. So you put a chunk in right now, and 3 months later, you buy another chunk. 3 months later, you buy another chunk. So by the time 1 year's up, you would always have something that matures every single quarter, or you could even do it every single month. So then if you end up needing, I don't know, a few $1,000s, you can count on something maturing every single month. Now for me, because my money usage is so unpredictable, I might need to buy a car all of a sudden, and then I would need $10,000, $20,000. One last thing I like to mention is that the Fed is increasing their interest rate. Now it's going to creep up a little bit at a time. I'd say maybe 0.25% every single year for the next few years. So what does this mean to you? It means that if you mistakenly get the 5-year CD or even a 3-year CD, if the interest rate goes up by 0.25% or more every single year, you're going to end up in a situation where you're holding onto the CD and the interest rate in it, it's going to be less than what you can get at an online savings account at some point. So right now, because the interest rate is going higher and higher, it might just be better off to hold on to your cash in an online savings account and just wait for the natural online savings rate to go up. I hope you enjoyed this video and get a good sense on where you should park your cash. Now, this is only for emergency cash. If you have anything more than that, of course, you should really just be investing it. Don't forget to give me a like on this video, comment down below. Let me know where you prefer to park your emergency cash. If you're interested in supporting my channel, don't forget to check out my Audible link down in the video description below, where you can get a free audiobook. And if you don't like this audiobook or this service, you can cancel it before the subscription expires and you don't have to pay a thing. Now, you can use this audiobook to listen to it on your commute or whatnot, and just kind of double duty the time that you used to do your commute, and you can kind of expand your mind at the same time. You can also support my channel directly through my Patreon link over here, where I give various perks at various contribution levels, such as help with your credit score or help with your finances. And as always, don't forget to subscribe to my channel over here and click that bell icon next to that subscribe button so that you get a notification whenever I upload a brand new video. Thanks for watching.